Yo, what's up everyone? It's your boy Looney, and today we're breaking down call credit spreads. It's a more intermediate strategy and how they work, how I'm using them, and real trades that I've opened on SOFI, RIOT, and Mara. Before we get into it, quick shout out to the Discord community, free to join. And then the premium gets you trade alerts, coaching, and a full course on selling options. It's all for $8 a month. Links are in the description. Let's jump in. So first, what is a call credit spread? And I'm going to show you that you can actually learn about what it is on Robinhood itself. So if we go to trade options and just click on before you even do that, stay on Builder, and then you can scroll down here and you can learn about call credit spread and how it is a bearish strategy. And then you hit this question mark at the top right, and you can read all about it and how to manage it. Definitely worth reading through all this because you learn all the risk, you learn about the profit and the max loss. It is worth the read and it does help a lot, but I'm going to explain it pretty quickly and in short term. So it is a bearish to neutral strategy like it showed, and you sell a call at one strike price that is out of the money or usually out of the money, and then you buy a higher strike price. So you can see here, I sold a 16 call and then I bought a 17 call. Both of these have the same expiration. Doing this, you collect a credit. So you get money paid to you similar to a premium when you sell options, and your max risk is the difference between the strikes. So, and also you can include the minus the credit that you received. So the max loss in this scenario is 100 because 17 minus 16 is 1 times 100 is 100. And then you could just minus the premium we got for this. So in this trade in particular, I got $9. I thought it was $10, but now looking at it, it is $9. Oh, that's not the one I opened today, but in that example, $9. So really in that scenario, your max risk is like $91. So let me show you the example that I was trying to do. And I opened a new trade on SOFI today, and I gave it out to my premium Discord. You do need level trading to do this type of trade, but it is a 16.5 and 17.5 call credit spread. And I collected a $10 credit up front. You could see here, got canceled a few times just because I wanted to get the correct price at what I was looking for. So with that, I am risking $90 to make $10, because if you do the difference between the two strikes, again, is that 100 or 1 times 100, and then you subtract the credit. So it's really $90 I'm risking. So that's about a 11% return in about a month. So that's really good. That's not bad for a defined risk trade. And what I mean by defined risk is there is a max loss. Because if we scroll down here and just keep going, because it's a bear strategy. If the stock runs up, your max loss is 90, like it shows. Now you can lose a little bit more depending on when you close this trade. If you close it early, like here, but the way I'm managing it is I'll probably close it a little bit close to expiration. So if I do lose, it is not a lot, or it's not amplified. But why did I enter this trade? And that's because SOFI has been trading near the top of its Bollinger Band. If we look at SOFI and go to this one month chart, because that's what I did on my expiration is 1 month, and it spiked up today past the Bollinger Band. And usually when that happens, the stock trends to go back into the clouds or the lines of the Bollinger Band. So the upper one staying here was 14.4. And to be even safe, I went a lot higher. I went to 16.5. So very low deltas, very safe trades. And I'm betting the stock stays below 16.5 by expiration. Now, other spreads that I have been opening has been a lot. So I have this Mara trades, I have RIOT. For RIOT, I have $11 one and a $12 one. So you can see the $11 one is currently in a sticky situation because RIOT is going up to $11, or it looks like it is, which is not a bad thing because I own 800 shares of it. So I do miss out on a few gains by doing this trade if it does go above or gets to $11 by expiration. But on the other hand, I at least get to hedge in case it doesn't go past $11. And I also have some kind of cushion. So the stock is really $11.06, which isn't a lot, but overall, I will manage this pretty closely. And then I have another one on RIOT at $12. We'll see. I might need to open a new one just to kind of double down and make sure I am playing it safe. We could see the $11 call is a high delta, but if we were to do this $13 call and then a $14 one, this one is a little bit better. You get one strategy, and it's another one where you get $10 credit. It's not going through at all because it's not market open right now, but that is why I did this trade. And then Mara, similar. I have a $18 one, and I think that might be it. I wonder if I have another one, but I have a $19. So really being careful on where I'm choosing the strikes. You can see that RIOT is probably the one that is in the red or closest to actually losing the trade. But all these trades are small. These are 1% to 2% of my portfolio. I'm using $100 at a time. I'm not over leveraging. In this one, $200. So my max loss is that like 200 mark or close to it, maybe 280 if we go down to here. Yep, so 188 is my max loss. And right now, let me just go back so that it's getting back to the right thing. If it stays where it is right now by expiration, which is the 3rd, so still have a month to go out, I will make a profit of $12. So out of all of them, this one is probably the one that is the biggest issue. But again, not using a lot in my portfolio. I plan to manage these as we get closer to expiration. And that just means watching how the stock moves, watching theta decay, and possibly closing early for a profit or a loss. So why am I doing credit spreads right now? And the reason for that is volatility is pretty low. And I know that Bitcoin and crypto has been running, and overall market has been running. So it's hard to bet against the market when that's happening. But volatility is really low with VIX around 16 or 15. I'm hoping it goes down, or not hoping that it goes down. But if it does go down, I might have to do more stricter hedge strategies, because once it gets to that lower end, it's very good to be cautious because that means volatility is very low. So these spreads help me stay active without overcommitting capital, because with selling one-legged options like selling puts or selling calls, you do need more capital. And because the VIX is low, I'm not really comfortable selling puts aggressively. I do sell puts, but it is not a lot. Again, I am keeping cash on the side. Instead, I'm doing the credit spreads or the call credit spreads because just to hedge in case we do see some volatility. And if it does pull down, then I'll start selling puts and collecting profit on my covered calls and call credit spreads. But yeah, I have a few puts, but that is why I am doing that call credit spread. So like I said, plus I already own the shares of RIOT, Mara, and SOFI. So I do miss out on a few gains on towards the upward, but these spreads are part of a broader risk strategy. A lot more hedging. Even if the stock rips, I do benefit from just holding the stock. And I have a few long buy call options that will do well as well. So some key takeaways from this video is defined risk is defined reward. So these are very, I wouldn't say safe strategies, but manageable strategies that you don't really have to pay too much attention to until you get closer to expiration. Also very good in overbought conditions, which we could be seeing right now. I'm sure we might see some upward direction just from my luck, but we'll see where the market goes in the next few weeks. And the last thing is just stack small wins while protecting capital, because these are very small positions and they're not a perfect hedge, but they do hedge me a little bit with some premium or credit. If you want to see how I manage these in real time or want help learning this strategy, hop in the Discord. It is free to join. And then the premium version, I will give you the call outs for these. Like, comment, and subscribe for more real trades and breakdowns. Peace.